I am Dr. Apur Bhatnagar, Associate Professor, SAGE School of Management. This is my video lecture on International Monetary System in the subject of Business Economics. The learning objective, evolution of international monetary system, gold standard as such, failure of the gold standard, the role of monetary management and the World Bank and the reforms which are being taken by the IMF. The gold standard. It was one of the oldest standards. It is the exchange rate between the currencies are fixed on the basis of gold rates. Convertibilities of currency into gold and vis-a-vis. The common unit of value, payments, store value, and international liquidity are on the basis of the gold. There was a breakdown and the restoration of the system. The outbreak of the First World War, the gold standard breakdown. It was suspended and the currency convertibility with the gold comes to an end. There were various attempts made by the UK and the US to restore it. IMF and its purpose. IMF is basically made for monetary cooperation between the countries to promote the exchange stability in the country, reducing the degree of disequilibrium in the economies. There is a multilateral system of payments. IMF functioning and conditionality. It works on the basis of quota. It works on the basis of the national income of the countries, gold and foreign exchange reserves with the country, and share of the country in the world trade. IMF gives assistance on the basis of balance of payment deficits. Deficits between nations, purchasing power, and other currencies or the SDR, special drawing rights. Assistance available for a short period of time, buyback of its own currency, and conditionality. Multilateral payment systems comes to an action. No other exchange control. Spot exchange rate should not be varied beyond the levels of upper and lower level up to 1%. Funds or a currency may devaluate by 10%. Borrowing is only allowed plus minus 25% of quota in a year. Okay. Special drawing rights. It is the reserve assets for international liquidity. Transactions with general accounts, transaction with designated country, transactions with agreement. International payment mechanism. Gold, SDR, and foreign exchange are the first line of liquidity. The second line of international liquidities are working balances and international trade credits. There are short-term foreign assets as well as long-term bonds which can be used as the second level of liquidity. Thank you.